We seek out the life-changing returns you can only get from investing in assets early. Make sure to visit silverchartistnation.com for a free weekly chart pack covering early-stage assets ready to lift off. Now, here's your host.
I want to welcome Steve Hyland, also known as Small Cap Steve. He is a well-known small cap stock investor, CEO of Cannabis Group, which owns the Daily Dive. Welcome, Steve.
Thanks for having me, Elliot. I'm always excited to come on and talk about small cap investing, and I'm looking forward to this chat.
Yeah, me too. And, especially because, we both have a shared love of small cap stocks. So can you start by explaining why you like to focus on smaller companies?
Well, it started out with, back in the day, I wrote all three levels of the CFA program, and I remember I read this. There's this one particular section where they talk about the 8 ways that are academically proven to generate abnormal returns, and one of them was if you focus on smaller cap stocks. So, in other words, smaller valuation companies. And it makes sense, right? Larger institutions, they don't really want to support these deals. There's also a lot of crap out there. So a lot of companies do fall, they fall between the cracks. And I think that there's a lot of opportunity by just following that universe and, looking for where those undervalued, undiscovered companies are.
Yeah, absolutely. And, I started by looking at how Netflix was a small cap stock at one point. Amazon was too. You could have put $500 into those and had life-changing money. So that's why I like small cap stocks.
Yeah. And I'd say that the big thing that a lot of investors struggle with is, and this is the whole risk. And I guess we can get into that now maybe, but it's when you look at those Netflix and those blockbusters or whichever, company that we want to talk about that's sort of ran from, has been a 20 to 100 bagger. Typically the share structure and balance sheet is such an important component to that. And knowing that, you're not just sitting there with, waiting on the next raise and then you get diluted down. So I agree, but it's very challenging to ultimately find those and know that you're not just investing in what's going to be a wealth transfer vehicle for those deal makers behind it.
Yeah, no, it definitely is, and it's also really important. I mean, it's really important because those stocks, that now they're hundreds of billions of dollars. So you can find a small cap that'll go from 200 million to $1 billion pretty fast, but can it get to 200 billion? I mean, that takes something really, really special. So that's why those are so hard to find too, right?
Yeah, that's extremely rare. That's actually a good question. Have there ever been any small caps that have ran from under $1 billion to $200 billion valuation? What was Netflix at its low? I'd have to research that.
Yeah, no, I think they were. I want to say Amazon was under $1 billion at some point. When it back in the 90s, and I think Netflix was around there too, which is why they're now like 100 to 500x baggers.
Yeah. I'm pulling up the market cap right now.
Yeah.
Sorry, I know that this is riveting podcast.
No,
let me see if I can get that.
Yeah, you're all about. So.
Yeah, you're right. Netflix at one point was trading, according to Y charts, anyways. It was trading in that 300 million to $1 billion valuation, which today you're right. So yeah, no, that's look. I'm learning live on the air here. I didn't realize that Netflix actually ran that far. That's
yeah. That's what's unbelievable about it, and that's what excites me so much, and that's why I'm always on the lookout for that next, potential 100xer. And it's hard because a lot of things have to work. It has to be a nationally recognized brand. It has to have low debt. It has to be something that can explode into the hundreds of billions potentially. So it takes a lot of thought when you're picking those.
Yeah, I do think about it a lot in terms of, what ultimately you need a company that's going to turn into some sort of mega cash generator to see that scenario happen.
Yep.
And the thing that always makes me nervous about small caps, and perhaps, I'm just sort of thinking out loud here, but perhaps when you're looking at a Netflix, and this kind of goes against the sort of the idea, the smaller the better, but Netflix was trading volume. They had real operations, real operator in that $300 to $500 million range. I mean, that's probably a more interesting flag than, I think some of us get caught up in this idea that, the smaller the valuation, the better. But the problem with that is that those are often like skeleton companies where you're more likely to just like I said before, get caught up in the people who are actually, control the company, finding ways to extract any sort of shareholder value for themselves. And I've been in some of those companies where, one Photon Control 10 years ago, where the people who started the company realized that the IP in it was worth a lot, and they actually just tried to steal the IP directly from the company. Thankfully, an activist shareholder group got involved and prevented that from happening. But it's very thought provoking to sort of think of how do you find that next Netflix setup. My universe is more smaller than even Netflix. Like, I'm generally more, and I call myself small cap Steve, but I'm actually probably more micro cap Steve. Yeah. So I generally, like, when a company's got to Netflix's size, I'm generally like, it's usually out of my universe, and I'm talking like that 500 million to $1 billion range.
Wow. Okay.
But the fact that Netflix, Amazon, Google, all these, Facebook, Twitter, all these companies that everybody was looking at back, like, remember, we're talking like, those mid 2000s to 2010, all these things were just cash incinerators at the time. And, fundamental investors were sort of scratching their head going, okay, well, this doesn't make any sense. And then flash forward, 10 years later, they're now massive cash generators. And it's like, okay, maybe we should focus more on total addressable market. So I think that's, but the problem is that's now created a lot of froth in both the micro cap and small cap space, where everybody's kind of looking at sort of what happened with Netflix and what happened with Amazon and saying, okay, maybe we should just focus on total addressable market. And like, if we talk about Netflix and we look at Netflix in, 2008, 2009, 2010, I believe that the model back then was still mostly, back then they were still doing like the DVD mail-in model, right?
Right. Yeah.
When do you know at what point Netflix actually got into the actual video on demand component with the online platform?
I don't know, but I think it was pretty early on. I really think it was pretty early on. I think at that point, like, once it started to become disruptive, I think it started to look pretty expensive to a lot of people, but yeah, it was still really cheap relative to where it is now.
Oh yeah, totally.
So yeah, I mean, that was just a good one to look at. And I mean, it had a strong brand. It was, nationally recognized, low market cap, and just the sky was the absolute limit for it. So, if you could find anything like that now, that would be huge. And same thing with Amazon. I mean, back in the day, Amazon had a small market cap around the 1990s, but very popular website. So that's kind of what I'm always on the lookout for. Like, does it have a strong brand and a low market cap, and it's not about to go bankrupt, essentially.
So yeah, that's interesting. Do you look at spend much time on the cash flow statement or the income statement when you're looking at these sorts of stocks?
What's really important to me is making sure that they have enough cash and they're not about to like either take on a lot of debt or dilute the shareholders into oblivion.
Yeah. So the reason I asked that, and apologies, I know that you're supposed to be interviewing me, is that I get so caught up in how much cash is on the balance sheet, how much cash are they burning, that sometimes I think that I lose sight of that, overall brand and just addressability of the operating business. And I think that that's some of the biases that we have in terms of information overload. It's interesting because we now talk to a lot of technical analyst type guys. And 5 years ago, I thought that like the whole technical analysis thing was kind of silly.
Yeah.
But I will say that like the ones that have been doing it for like 10 years that have success, they all keep it so simple. Like they're all just like, we're only looking for like 5 or 6 things. And and I think that there's probably something to be said for that, especially in this market. Like I'm seeing small cap tech names that like I know in a different market would be an incredible short that are you're crazy to short anything in this market. And like I was chatting with a large broker who was saying to me that they were at a conference where they're like, all that matters is total addressable market. That's all that matters today. And it's because everybody looks at Amazon and they look at Netflix and they look at Google and they look at Facebook. What happened there? And they actually address this really large market. And exactly. To me, that's a trap, because when you really break down these companies, like 95% of them don't actually address that total addressable market, right? Like it's usually like, maybe you hit 1 or 2, but even if you did, you're still not like, you still don't really own all the IP here, or you're not like the real value add in this chain. Yeah. So like you're not going to be Amazon, you're not going to be Netflix. Now look, I'm talking more. I follow the Canadian small cap name, so like it's not like I'm like necessarily looking at this universe of things that necessarily have that ability. But I do have a couple names that now that we're unpacking this, that I think actually do have a shot of doing that.
Excellent. Yeah. Cool. So yeah, I definitely wanted to get into your outlook kind of on microcap land, but I wanted to start high level. What kind of growth industries are your favorite right now? What sectors excite you?
I think the U.S. cannabis is got a nice 5-year run ahead of it. Look, I'm obviously biased. I'm from Canada. I saw what happened with these cannabis stocks. Retail investors love the idea of making money off pot stocks. And I'm not a cannabis user. I say good on you if you are. And I don't really know a whole lot about cannabis outside of the fact that I know that retail investors love to invest in cannabis. And what that means is there's going to be tremendous demand for that capital, or to invest that capital. And it'll start, institutions, when they know that retail is going to support them, they're going to try, especially in 2021, they're going to try to front run that. I believe that once you get some of these U.S. cannabis operators uplisting onto the NASDAQ and NYSE, and they get access to Robinhood, you're going to see a whole wave where like the True Leafs, the Green Thumbs, the Curaleafs, et cetera, are going to just totally explode. And whether you, if it turns out like it did in Canada, all reasonable people are going to be rolling their eyes saying, well, this doesn't make any sense. But it doesn't matter, because retail investors are going to eat it up. So I'm very from a capital inflow standpoint, I think that U.S. cannabis is really interesting. The ESG stocks, I think under Biden, are going to probably do quite well. There seems to be tremendous appetite there. And at the end of the day, I think gold's going to actually have its day, whether that's 3 months down the road or 2 years down the road. All of this monetary easing, it's going to come home to roost, and we're going to see tremendous lift in the gold names. I'd say that the one thing I'd add on gold was I got a little bit too long there in the early stages, where I started just buying up a ton of gold junior names, and I've been a little hurt from it. But the one thing is, it looks, a bunch of the gold junior names here in Canada, actually, there was a bunch of demand on the investment side for them. But what never happened was the large producers never actually ran. So so you're not going to see the juniors lift until you get that. So right now, if I were positioning, I'd probably get into those major producers' names, like the Barracks and the Newmonts of the world.
Right. That is the $1 million question. Like, what is it going to take for gold to lift off? Because, all the gold bugs, strategies and analysis is right? They're printing money like crazy. They're about to send out checks to people. The dollar is being debased. But when is that going to show up in an increase in the price of gold? It's like the $1,000,000 question. People have been waiting for a long time for it.
I agree. I think that like right now, Bitcoin is stealing gold's thunder, and I at first I didn't agree with that narrative. I think that is happening now. If you watch CNBC, they're constantly talking about Bitcoin, which is a narrative, and gold runs on sentiment, right? So the sentiment's not there yet, but I do believe that Bitcoin will reach a point where it just does get too frothy, and they can't bring in enough buying to keep this thing running, and then we're going to see it sort of have a pretty nasty pullback at some point. I don't look with all the buying that's come into Bitcoin. I don't know when that occurs, but it's like what's the market cap at today as we film this video? It's trading at just under $1 trillion market cap.
Right.
So at what point do we reach that level where people who are going to buy into Bitcoin buy in, and then there's nobody else to keep carrying the torch?
Yeah, at some point it'll just get too big. I mean, like once the institutions all take over, I don't know. They would argue that, okay, well, Tesla's one of the first companies that put $1 billion into it. What about all the rest? There's still so many more that have money to put in. So
yeah, I don't see. I disagree with that thesis. Like, I think there's going to be a few, but proper custodians of capital aren't going to take the cash on their balance sheet and dump it into a speculative, unregulated cryptocurrency. There'll be a few, like Elon Musk, who walks to the beat of his own drummer, as they say.
Yeah.
I don't see it happening. I think that Bitcoin at some point is going to top out, and it's just not going to be the shiny new object. At some point, the shiny new object will be gold, and we'll see the sentiment turn. That's my belief. But like, I'll be honest with you, if you and I sat down a year ago and you told me that we were going to expand M2 by what have we expanded the overall money supply by over the last 12 months? 30%.
Yeah.
And gold would only rip, $200. I probably would have. I would have been a lot more bullish. I'll put it that way. I mean, at this time last year, pulling up a chart here, gold was trading like around 1658. So fundamentally, if we just want to just take the increase in money supply and rank it against gold, we should be like trading well above $2,000. Just increase to increase.
Yeah, no, you're totally right. But I think what's new now is just the money's going directly to the people. So before it was just going to kind of like the banks, and they were just kind of hoarding it, and it wasn't trickling out into the people's pockets. But now that they're sending $1,400 checks to at least Americans, I mean, what do you think people are going to be blowing that money on? Just so many things. And I think prices are really going to go up. So that's what's going to cause money velocity to spike and inflation to spike, is my opinion.
I agree. Like this whole COVID thing.
Yeah.
I got my son actually turned 4 today, and this has been he spent his whole year as a 3-year-old, almost, right. It's now February 24th, so COVID really started to hit us around mid-March, and so he pretty much spent his whole 3-year-old life not being able to interact with other kids. So he's maybe hung out with his cousins like 5 or 6 times over the last year, and which is obviously that's going to have an impact on him. But I always say to him, like, what are we going to do when COVID ends? And like, we'll go to Disney, we'll go do a movie theater. We got all this stuff planned that we're excited to do. And ultimately, what is that? We're going to spend money. We're going to increase velocity. And I think that what's being missed by so many, just people in the investment world is that velocity is going to pick up. It's going to pick up, and that's going to result in price inflation.
Yeah, exactly. So that's why I'm pretty heavy in that too. Also silver companies, right? Because are you just as excited about silver as you are about gold?
I think silver. We're in some junior mining silver names,
Mhm.
but I think that silver at some point. Um, at first, I kind of rolled my eyes at the silver short squeeze because it looked like it wasn't going anywhere. But it is. It seems like everybody who's behind this thing have not given up, and if they keep at this, it's only a matter of time until they break this thing. You'd think, unless like the banks that are short are just going to keep expanding their balance sheet to hold down a retail movement. Um, at some point, we're just going to run out of the physical commodity, and this thing's going to have to reprice.
Right. Well, that's the thing. The fundamentals behind the physical are just like the demand is way outstripped the supply. Like if you try to buy physical anywhere, the premiums are so high and it's really hard to find. So you're right. They're definitely big on it still. Like I think the Sprott Silver Trust, PSLV, is what they're buying because they buy the physical silver and they just keep accumulating it. But so I agree. There's momentum. We'll see where that goes. That could be exciting. But also it is part of the ESG movement. I think there's a couple grams in each Tesla. So
and
it'll take
and
yeah.
solar panels.
And solar panels, yeah. So it'll take advantage of that. Okay, cool. So what are some names that currently excite you the most? Some small cap names.
Okay, so I'm focused primarily on the Canadian junior venture market. So, but the name that I'm the most excited about that I just think, and I've been in this name for years, is Eguana Technologies, and you're based out of California, right, Elliot?
Right. That's
Yeah.
right.
Yeah, so they're really penetrating the California market right now. So here in Canada, nobody understands solar. Like in the Toronto area, which is where I live, if you drive around the suburbs, maybe 1 out of 100 homes have solar panels. Maybe like it might be more like 1 out of 2,000.
Yep.
Like when you see a house with solar panels, it looks weird. Um,
Right.
so this idea of a name that has disruptive technology
Yep.
in solar is hard for people to wrap their head around. I believe that if Eguana was on the NASDAQ, which I fully expect them to start to move towards that, there may have to be a reverse split to get there, just because the share structure is so loose. The stock would probably trade at 5 to 10 times where it is today.
Oh yeah.
So they have one of five licenses. Don't quote me on this. It's like one of 4 or 5 that make it so that you can hook up your home battery to the grid, and then your battery serves as like it's like you've got a mini power plant in your home that can communicate with the grid, put power into the grid, suck it out, and use your solar panels as Elon once described. Now, the difference between Tesla and Eguana is that Eguana has proprietary power controls that are best in class. Very few companies have this ability. And if you look at Sonnen, who I don't know what Sonnen got taken out for by Shell. The rumor we always hear is about $500 million. Eguana effectively designed that battery, right?
Yeah.
And the previous CEO before Justin Hyland, Michael Carton, he signed such a bad deal with Sonnen that if you look at the income statements, they had negative gross margins while selling the power controls. So then the company said, okay, let's switch gears here. We're going to leave Sonnen and we're going to focus on doing the solo. They quickly found themselves in a contract with Daimler and Mercedes. So Mercedes decided there for a brief period of time that they wanted to be like Tesla and like start installing solar panels and home batteries. So Eguana was going to white label the battery for them, and it would be like the Tesla Powerwall, but for Mercedes. And then ultimately, like they've got like a year and a half into it, and I think Mercedes came to their senses, and they're like, okay, that might make sense for Tesla, who like can do bizarre things and catch a lift in their share price, but that doesn't make sense for us. So they walked away, and but they at least took the time to say we thoroughly vetted this technology and it works fantastic. And now Eguana's going at it solo, but when you look at the partners that they've attached to for this tiny microcap out of Canada, you got Itochu, who's just, a giant company out of Japan that's for some reason taking an interest in them. Itochu also owns something like 25% of Sonova. So Sonova's obviously going to have to ramp up their home energy storage game. So I think it's pretty likely that we see some sort of white labeling batteries there. And Itochu's also, they've got this whole plan, and this is all publicly available. You can read about it in Itochu's materials, where they want to actually work towards VPPs and leasing batteries. And they've kind of chosen Eguana as their home battery company that they want to back and sort of use as their vehicle to run this leasing model. So I think that if you're looking for something that sort of has that disruptive multi-billion-dollar market cap potential, to me, this is like one of the very few names in Canada that I think actually has a shot. Not saying they will get there, but I'm saying it has a good shot.
Well, they do have a good shot, it sounds like. So they have proven good technology that, it works and people want. And you're saying they've partnered with some pretty big companies already, right?
Yeah. Like they're with the largest solar installer group in Germany, Hanwha Q Cells, and Itochu. There's a couple other, they escape me, but they're all like relatively big names that Eguana's partnered up with. Something I was tweeting about this yesterday, but like if they were taken out by a SPAC right now, I'm sure that the valuation would be at least $500 million. It's trading at what, like $140 million market cap?
Yeah, Canadian.
I'm expecting a NASDAQ uplist and for the stock to do quite well over the next year. But the one thing I caution shareholders is this is a name you've got to be comfortable with some dilution. You got to be comfortable with some cash burn because it's still early stage. Like if they really hit their stride this year, they might hit like, $30 to $50 million revenue and still, ultimately burn cash, because ramping up to what they're trying to build is, it's going to be a cash burning exercise. And you've got to be comfortable with some level of dilution. But what we want to see as shareholders is that in each round, they're doing it at a higher and higher and higher level.
Gotcha. No, this sounds great. Yeah. Another important thing to look at for the multi-bagger is it has to be in a growth industry, right? That's really going to take off. And ESG, like green energy is huge and will grow. I agree. So, and I'm sure you looked at the financials, right? I'm sure you've dived into that.
I've spent countless hours and like just chatting with Justin Hyland. Like something I like about Justin is he's a CEO that if I ask him what's your monthly cash burn, he like has it down to the dollar. Wow. Whereas some of these CEOs of microcap companies, they hum and they haw and never really get a real number out of them because they just don't really know. Yeah. They've a lot still has to go right, but just in terms of, and I see a lot of Canadian microcap names. I really like the team. They're building real things. It's not just some weird, Canadian microcap that's designed to get a bunch of deal guys to, transfer wealth from retail shareholders into their own pockets. Like this is like a legitimate institutional grade name that to be clear, when you look at the financials, the balance sheet, the income statement, the cash flow statement, all the accounting notes, there's been some balance sheet issues in the past. It's all cleaning up now because they've just announced a $15 to $20 million raise, no warrant coverage at 40 cents. I'm told that thing's closed. Well, it hasn't officially closed, but like if you wanted to invest in that private placement, you're not going to get in at this stage. It's like already allocated and whatnot. But that's, put that cash on the balance sheet. All the convertible debentures are now well in the money, so those are all getting converted. You're going to see a bunch of options and warrants obviously get exercised as well. So you now got a clean balance sheet. So it's really just now it's the exercise becomes let's get all these dealers up and running, make sure we have enough strength on the balance sheet to just ramp the hell out of this thing and start to become one of the big players in the U.S. in terms of residential home storage.
Very cool. Definitely look into that one. I'll just ask you about one more. Any other names that excite you?
So names that really excite me. We're in PowerBand. They're an auto fintech play. This is real high risk. I really curious to see how the next 6 months play out as they launch. I mean, what we're told is that they're going to have 5 billion cars available on a website / app that allows you to buy, sell, trade in your vehicle, and with opportunities for leasing or and then they're partnered with a company out of I think Dallas, Texas, called Musa, and Musa. This is what I'm told, and I'm just one guy, so I don't have all this time to vet all this. But what their claim to fame is that they're the only and they put this in their marketing materials, but they're the only national footprint of used car leasing offices in America, and it's all fintech, so it's totally paperless. So PowerBand bought them after they were going through sort of a rough financial period. Funny thing is, it's not like PowerBand really had a great balance sheet at the time, but Kelly Jennings, the CEO of PowerBand, he ended up reaching into his own pockets and investing $2.5 million. At the time, I don't even think he did it through equity. I think it was like a non-convertible loan. I think he did end up converting some of the loan into shares, just so that he could get that deal done because he believed in it so much. What's interesting about Musa was that they were the first non-captive official leasing partner with Tesla. So there was a point where they were leasing Teslas, and like Tesla was actually sending them business. But my understanding of what was happening there was it was mostly really, really high credit, worthy individuals. So the FICO scores were all like over 700. And unfortunately with that, you're not going to be able to make a ton of spread off of, providing those leases. But I believe that PowerBand's opportunity will be sort of that used car leasing model. And we'll see. It's the rubber's hitting the road here, and over the next few months, you're going to really see the app sort of roll out, and all of the comps are just gigantic. So if they're actually able to show that they're doing real transactions, this is going to be a really interesting name. And it's one worth keeping your eye on, because it's like before when I talked about all these companies, they talk about total addressable market, and then when you really peel back the onion, it's like, oh, well, they don't actually address that market. PowerBand does actually address that total addressable market, which is in the same thing with Eguana. These are two names that have a gigantic total addressable name, and they do address it, which, getting back to the names that you're kind of looking for, I think that kind of meets that, although they don't really have that well-established brand that I think you're looking for.
That's true. They don't quite yet, but you're right. The total addressable market's good, and they have a good product, good technology, and it's just like one maybe big partnership or something to get it going. So yeah, there's no perfect silver bullet stock necessarily that you can find that'll have everything. So, and it has $100 million market cap. So how hard will it be to get that to $1 billion on any good news? So my concern with PowerBand is just the lack of a strong institutional investor, and that's something I hope that some institutional investor steps up at some point and kicks some money in, so that it just adds more credibility to the story. But it's got a huge retail following, and it's simple to understand, right? Like, you're just selling cars online, so that's those are two names that I really like. As you can tell, probably from those two names I talked about, pretty simple to understand stories. One, we've got they make batteries you put in your home. Pretty simple to understand that. Yep. The other one, they sell cars online. Yeah,
that's the stuff I get excited about.
Exactly, and they're both in industries that are definitely going to grow into the future. So that's huge. Well, anyway, thank you so much for sharing those two. We're going to obviously do our own due diligence before buying, and definitely going to look more into those and follow them. So, where can people go to find you to learn more? And if you have anything else you want to add, feel free.
Yeah, so a couple things I'd add. One is both those companies have been advertising clients of our website, the deepdive.ca. So that's just full disclosure there.
Yep.
I am so much more long than the advertising fees that they've given us that it's not even. I just like to be transparent in that regard.
Yep.
We've got probably over 30 advertising clients, and those are the two that like I've actually kicked a lot of money into because I like the opportunity. So you go to the deepdive.ca. We have a daily live show that we cover. It's on Twitter, Facebook, YouTube, called Small Cap Steve Live. And then we also do daily content on our YouTube channel called The Daily Dive. So that's sort of what we cover. And in terms of overall, if you're interested in learning more, nothing that we say is, designed to be, financial advice. We're not licensed financial advisors. Nothing's a buy or sell recommendation. These are just two ideas that I'm particularly excited about, and I've attached a substantial amount of my portfolio to. Probably too much, but when I find stuff I like, I like to roll the dice pretty heavy.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented. This video contains an affiliate link. While it will take you directly to Steve's brilliant free newsletter, if you do decide to make a purchase on the website, I will receive a small commission. In full transparency, I wanted to disclose that to you.